Hi, everybody. I'm Michelle, and I'm here today with Mark Sorensen. He is the founder and CEO of Royal Fund Management and 401k Maneuver. So, Mark, we get a lot of questions from our 401k Maneuver readers and some clients. And one of those big questions is, what do I need to know before I roll over an old 401k? So for people who've left jobs or, maybe just recently, or they've had a 401k sitting around with their past or sitting with a past employer for years. What advice can you give people?
Well, I guess the first thing I would suggest is that just something that's kind of common sense. And that is when you're in a 401k, you are a participant in a company plan. When you have your own IRA, you are the owner of that IRA. So in essence, you're going from a participant in a plan to an IRA. Not uncommon for people to not realize that they can do something with an old 401k to make it their own. You may ask follow-up questions, but another big reason is that your typical 401k has limited investment options. And when you roll to the IRA, it kind of opens up the universe to other investment options that might be available to you as a former employee.
Mm-hmm. Okay, got it. So what are some of the common misconceptions people have about rollovers?
Well, there's one of the things that gets confused quite frequently, Michelle, is the 60-day rule. There's a
Mm-hmm.
rule called the rollover rule where you're allowed to take possession of your money for 60 days. And as long as you put the money back within 60 days, then it remains tax deferred. And that is considered a rollover. However, the term that I think you're referring to, it means to actually move the money
Mm-hmm.
from a 401k to an IRA, which is another type of rollover, if you will. In the former, you can only do a 60-day rollover once in any 12-month period of time. But generally, you're making a rollover from your workplace retirement plan, 401k, or what have you, one time to your individual retirement account.
Got it. And people can, in fact, roll over a 401k, an old 401k into a new one, correct? Or does it always have to go into an IRA?
It does not have to. It depends on the plan documents, but if you've left one job and you're now working at another company that has a 401k, most 401ks will let you roll over the assets from the previous employer into the new 401k. There's a lot of opinion about this, so mine is just that. But my opinion is why not take that advantage of that time to move it to your own individual retirement account where you have
Right.
access to more investment options.
Got it. Great. Perfect. Thank you. So one last question. There are some people who, may say, I have an old 401k, I'm going to cash it out rather than roll over. And I want you to speak to not just the implications tax-wise, but just also, why someone might not want to do that.
Well, let's go first, Michelle, just to the purpose of the money. If the purpose of saving the money is for retirement, then, and depending on your age and the compounding of money over time, you might be disrupting your retirement
Mm-hmm.
by taking it out early. The fact is that you can do that and pay the taxes on it. It's generally it's tax deferred, unless it's a Roth 401k, which might be another question altogether, maybe another subject for another interview. But you also have to be aware of age. If you're under 59 and a half and you take the money out, you're going to pay a 10% penalty for a premature distribution.
And
In
that's in
addition,
addition to, right, the taxes.
in addition to the
Mm-hmm.
income taxes. In other words, in the 401k, you got a tax break for putting the money in there. The money was put in pre-tax. And
Mm-hmm.
so when you take the money out of the 401k, all the money that you put in, maybe the companies put some in a match or a profit sharing contribution, but all the gains that you've made also become taxable. And they're not taxed as gains, they're taxed as ordinary income as well. And there are other reasons why you might not want to do that. There's a uncommon tax code called the net unrealized appreciation, where some 401ks have company stock in them. And if you have company stock in the 401k plan, Even a rollover becomes more complicated to an IRA because you could have the ability to move that common stock, the company stock, to a non-qualified account and only pay taxes on the cost basis, which might be low. And then from that point forward, if you sell it as capital gains rather than ordinary income. So it can get complicated, and I would definitely recommend anybody considering a rollover, even of a 401k, get professional advice.
Absolutely. Absolutely. It's a great way to end this. Is there anything else you would like to add?
No, other than just not uncommon. People change jobs, have 401ks. I've read where people even forget that they have a 401k balance
Right.
in another company.
Yep.
So keep up with your money. If you leave a job, typically you don't have to roll over to an IRA or move the money to a new 401k plan, but it's advisable to move on with your new 401k and take the old company 401k and move it to an individual retirement account. Or if you deem it advantageous, roll it into the new 401k.
Awesome. All right. Well, thank you very much, Mark.